Even the UK inflation growth and the weak macroeconomic data from the United States failed to change the market sentiment. This points to the fact that the US dollar has lost its downward movement amid oversold conditions. Thus, the market is waiting for the beginning of a correctional process. Yesterday, there was a reason for the US dollar rise. The US retail sales data significantly exceeded the forecast. Consumer activity continues climbing, thus allowing the US economy to cope with another aggressive key interest rate hike aimed at a lower inflation. What's more, some representatives of the FOMC made some hawkish comments. As a result, the greenback stopped falling, but it failed to recoup losses. Today, the expected reports will hardly support the greenback, although the Eurozone inflation figures are slightly better than expected. They could hardly be taken into account. The final data unveiled an acceleration in a consumer price growth to 10.6% from 9.9%. The preliminary estimate showed a rise to 10.7%. Thus, inflation remains at its highest level since the record began. It's well above the target of 2% per annum due to surging energy prices and the euro's depreciation. Such data continues to exert pressure on the ECB's representatives. Thus, they may raise the interest rates higher, ignoring the economic slump in the region. On the trading chart, we see that the euro-dollar pair was influenced by some technical factors. The pair stagnated at the peak of the upward cycle after it approached the resistance level of 1.05. The situation has not changed insignificantly compared to yesterday's, and the pair is still hovering at the same level. This means that we see an accumulation process ahead of a new speculative jump in the price. From the technical point of view, signal levels are located at 1.05 for the upward scenario and at 1.03 for the downward scenario. Meanwhile, the pound-dollar pair may either stagnate or bounce off the psychological level of 1.20, since the pair has not launched a full-scale correction. Yet, traders are still interested in the long positions on the pound sterling. Under the current conditions, yesterday's stagnation may cause a change in the market sentiment, and in this case, the price may show new swings. If the price consolidates above 1.2050, the current upward cycle is likely to continue. If the price settles below 1.1750, a bounce may turn into a full-scale downward correction. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.